Take a 30,000-foot view of the market, and you'll see the world of investing seems quite large. Small caps, and don't let their name fool you, are growing and getting bigger all the time. While large caps are generating most of the noise, small caps are buzzing in the background. So why does this matter for your portfolio? We're going to break it all down for you right now on UBS Trending. Hi, everybody, and welcome to UBS Trending. I'm Anthony Pastore. So glad you could be with us today. My guest today is Cliff Greenberg, portfolio manager of the Barron's Small Cap Fund. Cliff, great to have you in the studio. Good to see you.
Great to be here with you, Anthony. Thank you.
Good. So listen, it's all we talk about is large cap, artificial intelligence, tech, the Magnificent Seven, and small caps are just kind of quietly performing well in the background. Just to give our audience a little bit of statistic, the Russell 2000, which is the small cap index, it's up 2% so far this year and up 22% year to date compared to the S&P. The S&P is up 10% so far this year and up 35% year to date. So the performance in the Russell is quite strong. And our CIO here is telling our investors and our advisors, take a look at small caps, not just the large caps. And since you've been managing small caps in your portfolio for 26 years, what's your take these days?
Well, on the small cap, first of all, I am a portfolio manager and an investor. I serve as a CIO of our firm, but I'm not really a strategist. But let me tell you, from my experience in investing in small caps have performed actually relatively underperformed significantly for the last handful of years. The best way to kind of understand that is that every day you see that the S&P, the NASDAQ, the Dow is at all-time highs, but the small cap index, the growth index, which we invest in, is still over 20% off its prior levels. So the stocks really haven't done that well. They're showing signs of life now, but really haven't done well for a long time. Small cap stocks standardly trade at higher valuations than large cap companies because they grow faster. That's historically been the case. But presently, small cap stocks trade at a very significant discount to large cap stocks. And we think that over time, small caps will grow faster, and therefore that relative valuation differential is really going to be a wind at the tail of small caps as well.
And that's where you're seeing the opportunities. I mean, not to say that large caps are expensive. There are still some really good valuations in large cap. But you said compared to large caps, S&P, there's some really good value there.
Yeah, no, we think that small caps are very cheap compared to large caps. And the stocks that we own, we believe are fairly or cheaply valued against what they're presently doing and really cheap against where we think these companies will be years from now.
Is there any risk to that kind of thesis, perhaps that, I mean, look, there's a lot going on out there, Cliff. We've got a Fed that is starting to wind down. Here at CIO, we do expect a soft yet bumpy landing, maybe starting cutting rates in June. We're looking at a labor market that's still strong, but not maybe as strong as it was last year. So there's a lot of variables out there. Is there anything in that might pose a risk to small caps?
Yeah, I mean, the essence of our bullishness is that the economy, which has been kind of not growing so well over the last handful of years because of high inflation and unemployment, will get better. And the biggest thing that could go, and therefore we believe that the growth of small cap companies' earnings are going to accelerate. But the biggest risk would be that the economy actually, it's not a soft landing, that things actually get worse and that we go into recession. We don't see that. We don't believe that that's what's next in front of us, but that would change our outlook somewhat.
Right, certainly, yeah, there's always risk involved in the markets. You and I know that I've been in the industry as long as you've been running that fund. So we've seen all kinds of markets from the financial crisis to before that, 2001, the NASDAQ, the tech bubbles, all those things, even up to COVID. So there's always a risk involved. But yes, that's our base case here as well. Soft landing, maybe a little bit bumpy, but it looks like we're heading in the right direction. But I think what's even more interesting is you're getting to talk to many of the senior level management of the companies that you're covering, that you have in your fund. What are you hearing from those folks?
Yeah, and that is how we form our view on what's happening in the economy from our conversations with the CEOs of the companies we invest in. So what we're hearing is the economy has been soft for the last couple of years after growing very rapidly coming out of COVID. We've had this very interesting period that over the last couple of years, but things feel like they're bottoming, and we feel green shoots, and that we expect the economy to improve from here. When we speak to our companies, inflation really is behind them. It's not their costs went up dramatically. They raised prices to try to recoup those higher costs, and that whole cycle is well behind us, and everything's going in the opposite direction. They also say that it's kind of easy to find employees now. That used to be very difficult a couple of years ago, and the cost of hiring people was going up dramatically because you couldn't find the right employees, but that's actually reversed also. So what we hear from our companies is a little different than the public narrative, which is we have a very strong economy and very sticky and stubborn inflation, and unemployment is going to stay really low for a long period of time. Actually, we hear very different things, and because we are hearing that that the economy is not so robust, at least now, and that inflation is coming down, that's the premise on which we believe that interest rates will come down. Lower interest rates are often a very good thing for small cap stocks.
Yeah, I'm glad that you said that, Cliff, because there's a lot of difference between what we hear on TV, the various financial news channels, and what you're actually hearing from the men and women who are doing the work every day. And that differentiation, I think, can give our viewers who are investors and our advisors a little bit more clarity into what they're hearing versus what the financial news folks are reporting on.
Great.
Here's another question for you, and I'm sure you get this a lot. Of course, the AI, the artificial intelligence story is growing. It seems to be getting bigger and bigger, and we've talked about the Magnificent Seven, those large cap names, quite a bit. And being that technology is not the biggest sector within the Russell 2000 by percentage, but AI is still a story. Are you getting questions about that? What do you see in that space? Is it kind of existing in small caps?
Yeah, sure. I mean, AI is a massive story in all of the markets. In small cap companies, we do have investments in some businesses that are really benefiting because of AI development, businesses that supply parts to data centers which are needed, or there's kind of a lot of small companies that are beneficiaries of that. And many of those stocks have been wonderful winners. So yeah, AI is one of the important tailwinds that are presently driving and will drive earnings growth go forward.
Right, and obviously AI is not the only story out there. What are some of the other sectors within small cap that you see some really decent performance and opportunity? Yeah,
well, we run a diversified portfolio, investing in across all different sectors, and we really do try to invest in these innovative, special businesses in all different kind of industries. And therefore, we're finding a great opportunity in software stocks now, in certain consumer niche businesses, in many industrial companies are leaders in their niches, and there's great secular trends, or the companies are onto something special that that is leading towards what we think is strong growth now and great growth in the future.
Excellent, Cliff. Thank you very much. And yeah, small caps, as we say here, and you're also indicating, it's a great way to capture some of the market's upside and future growth potential. Cliff, really nice to have you join me in the studio. Especially now. I mean, this story is really starting to pick up steam in the small cap space, so good to have you here to talk about it.
My pleasure.
Great. Cliff Greenberg from Barron. And thank you all for joining us. We've got a lot more information from our great partners like Barron, plus our own Chief Investment Office on our website. You can follow that at ubs.com/views. That's our insights page. Plus, take a look at all the social media channels that UBS sits on, including Instagram. Follow us at UBS Trending for lots of great video content and podcast content as well. And as always, if you have any questions about your own portfolio, make sure you're talking with your financial advisor. Until next time, I'm Anthony Pastore. We hope you have a great day, and remember to keep your eyes on what's trending. We'll see you soon.